Opendoor has just closed the Tuesday session at $6.99, finishing the day down around 2.1%. But while the close is technically red, the story behind today's trading session is far more interesting than that headline number suggests. In fact, what happened inside the session tells a very different story from what the closing print alone communicates. Today wasn't a day defined by weakness. It was a day defined by quiet strength, steady accumulation, and one very sharp late-session sell-off that had everything to do with the macro environment and nothing to do with Opendoor itself. So let's break it down. For most of the trading day, Opendoor was actually in the green. It held above $7. It traded with confidence during a shaky market. Buyers stepped in early. Momentum names across the board were mixed, but Opendoor held its own. This matters because in a market that remains fragile, a high beta name like Opendoor is usually among the first to sell off. High volatility stocks get punished quickly on risk-off days. But for most of the session, Opendoor displayed resilience. It didn't get dragged into the early day weakness. It didn't collapse under the weight of market pressure. It held its ground. This tells us something important. There are buyers underneath the stock. Not hype-driven buyers. Not FOMO traders. But steady, quiet accumulators who are willing to support the stock in the $7 range. And that's exactly what you want to see in a company that's trying to build a base after a volatile few weeks. Now let's talk about the late session drop, because that's what brought the stock down to its closing price of $6.99. The sell-off had almost nothing to do with Opendoor specifically. What we saw was a classic end-of-day macro unwind. Indices rolled over, futures weakened, and algorithmic selling kicked in across the board. ETFs that hold Opendoor automatically reduce exposure when volatility spikes. Risk models tighten. Beta weighting gets recalibrated. And when those flows hit, they hit fast. That's why the chart looks like a slow, steady day followed by a sharp drop into the close. It was mechanical selling, not emotional selling. It wasn't driven by headlines, filings, or new information. It was driven by market structure. And on days like this, days with no meaningful Opendoor news, you have to separate the macro noise from the micro reality. Because the micro reality is actually pretty compelling. Opendoor is still hovering just under $7. And that's despite a red market, a late session algo flush, and zero bullish headlines to push it higher. When a stock can hold the majority of a session's gains and only give back momentum when the entire market rolls over, that's relative strength. Relative strength is one of the earliest signs of accumulation. It's one of the earliest signs that bigger hands are supporting the stock. And it's one of the earliest signs that a stock is preparing for a potential move higher once volatility cools. Another factor influencing Opendoor's price action is the ongoing impact of the warrant dividend. Many brokerages now show the Series K, Series A, and Series Z warrants in customer accounts. This has created a new layer of psychological and strategic positioning. Some traders are rebalancing between common shares and warrants. Some are taking profits on common while holding the warrants for optional upside. Some are trimming risk ahead of uncertainty. And all of this contributes to the sideways action we've been seeing over the last few sessions. But what isn't happening is just as important. There's no panic. There's no flood of sellers. There's no collapse in volume. There's no technical breakdown. In fact, the stock continues to trade within a tight band between roughly 680 and 740. That's consolidation. Healthy consolidation. The kind you often see before a bigger move. What's also interesting is the silence today from leadership. Kaz didn't post any major updates. Eric Jackson didn't drop any new comments. This matters because when Kaz posts something energizing or cryptic, the stock often sees a bump in volume and retail interest. When Eric posts something about the long-term trajectory, you get a surge of optimism from the base. Today was quiet. And quiet days tend to be dominated by structural flows rather than narrative-driven momentum. And that leads us to the unique angle for this video. The close doesn't tell the story today. The intraday action does. Today showed us that Opendoor has more strength underneath than people realize. It continues to find buyers at key levels. It continues to attract interest in the low $7 range. And it continues to show the kind of price action that suggests the market is not giving up on it, even during periods of stress. What makes this even more compelling is that none of Opendoor's recent catalysts have been priced in yet. The AI-powered self-serve home assessment tool that Kaz talked about? Not priced in. The efficiency gains from last week's company-wide hackathon? Not priced in. The new growth scoring system, which Kaz said was genuinely quite good. Not priced in. The acquisitions pipeline that has been tracking near the high end of their internal plan. Not priced in. And the shift in leadership tone, the shift toward accountability, speed, and tighter execution, that's also not priced in. All of these changes speak to a company that's getting sharper, faster, and more disciplined. And while the market is still digesting the warrant dividend and recalibrating expectations, the underlying business direction is moving forward faster than the stock price reflects. That disconnect is where opportunity lives. The late-day drop doesn't erase the early-day strength. It doesn't change the underlying accumulation pattern. And it certainly doesn't rewrite the long-term story. In fact, days like today can sometimes be the most revealing. They show which stocks crumble under pressure and which ones hold their shape. Opendoor held its shape. It didn't break. It didn't panic. It didn't collapse. It simply drifted lower with the market into the close. And that's why the theme for this video is Opendoor's silent strength. Because the truth is, Opendoor performed better today than the final price suggests. And if the stock can continue to find support in the upper sixes and low sevens while the market is under pressure, it positions itself well for the next rotation back into growth and high beta names. So if you're watching today's close and wondering whether this red finish means trouble, the answer is no. Today's finish is misleading. Today's finish doesn't tell the story. The story is how the stock behaved before the macro pressures hit. The story is the continuous accumulation. The story is the resilience. And the story is the fact that on a day with no news, Opendoor still showed strength until the market forced weakness across the board. This is not a day to panic. It's a day to observe. A day to take note of what the stock did before the closing decline. And a day to recognize that Opendoor is quietly holding its ground in a choppy and uncertain market. Silent strength isn't loud. It doesn't make headlines. But it matters. And today, it was on full display.